right, welcome back to another episode of Broke Up, Not Broken. If you're going through a divorce, don't worry, you are not alone. This is your one-stop shop for mastering your life and your finances throughout the entire process. In today's episode, we're delighted to host Vincenzo Villamena, the CEO of Online Taxman. Vincenzo is a renowned expert in international tax and accounting, specializing in services for expatriates and global entrepreneurs. Under his leadership, Online Taxman provides comprehensive tax advice and tailored solutions that cater to the unique needs of Americans living abroad. Today, Vincenzo will share his insights on navigating the complex world of expat taxes with a special focus on how life changes such as divorce can impact financial planning and obligations internationally. So whether you're just starting to consider divorce or you're in the thick of it, this episode will equip you with the knowledge and tools you need to master not only the personal challenges you might be facing, but the financial ones as well. So grab a cup of coffee or your beverage of choice, buckle up. Let's once again get you personally and financially empowered. Vincenzo, it's so great to have you here, man.
Thanks for having me, man.
Yeah, no, I appreciate it. And you're hailing from Brazil, and I'm totally jealous that you're hanging out in Brazil right now.
Yeah, I've been outside the U.S. for 14 years. Now I'm in Brazil. I was in Argentina, Colombia. I mean, I just love South America, so it's a great place.
What prompted you to do that?
You know, I actually, funny enough, I was living in New York, and actually I had sort of two life changes. I mean, I had a big, it wasn't a divorce, but I had a major breakup going on, and then I had a major sort of, there was a crisis in around 2010, you know, with the mortgage crisis and sort of like the repercussions of that. So with those two things happening, I decided to move to Argentina, and it was sort of one of those eat, pray, love moments where you don't really know what's going to happen. And then I ended up, you know, staying down there and building a business focusing on Americans living abroad, foreigners that want to move to the United States or investing in the United States, and and everything in between. So sort of that's how it started, and here we are, still working on it. A bigger company now.
Yeah, man. I mean, as I was checking out the website and all the work you do, you guys are like growing by leaps and bounds. At least have over the last few years, man.
Yeah. It's been a great ride. We've helped a lot of people along the way, and it's been awesome.
Yeah. How I guess, like, were you always in the tax world? I mean, is tax your background?
My thing is that I used to work at PricewaterhouseCoopers, right? And there we were doing both tax stuff and then a lot of valuation, right? And so, you know, then I went over to a private equity firm. I worked in finance for a little while, which for me was, you know, kind of my dream to work in finance. But then when I actually got into private equity and what it was, I quickly discovered that it wasn't as wonderful as I thought it was. And the times were also sort of tough in that industry. And that's when I moved down to Argentina, and really my dream was to be an entrepreneur. And that's ultimately where I am now and where I came from. And I think that's just an important part about life, is sort of going and pursuing your dream and at least seeing what happens.
Yeah, man. Yeah. And the work you do is, at least in my experience, is like dealing with taxes is always top of mind when it comes to divorce.
Yeah.
We work with, we have, we probably do, 50 to 75 cases a year or so, somewhere in that range. And there's always some element of, how is this decision that I'm going to make impact me tax wise? Right.
Yeah.
And all in this work and the attorneys can't figure it out. So that's where we come in, to help people understand, like, if you do this thing, this is where the tax, where the landmines, so to speak, that you might step on relative, tax wise. So you do a lot of work with expats, and we've had some international cases, not a lot. Most of them are domestic, but there really are some nuances to things people have to think about going through divorce. So what are some of the common tax challenges that those types of people face that you've seen?
Yeah, I think, the biggest thing is, we see a lot of people in international marriages, right? And so, like, when they do go through divorce, it's sort of, how do you divide up the assets, especially cross-border, right? And who gets the house, or if there's like a family business or some sort of business, sort of what's the value of that, et cetera, and trying to essentially unwind, these sort of foreign investments and foreign, whether it's foreign bank accounts or brokerage accounts or, like I said, businesses, and trying to sort of unwind it because, everything needs to be reported to the U.S. government, and obviously everyone knows, or, the government knows about it, and of course, like the two spouses do. So you have to sort of try to unwind that. And so, we, have a lot of experience in that. And then the other side of that, is obviously, in the U.S., people get, prenup agreements, et cetera, but those type of agreements might not apply outside the United States. So, I think it's important to look into that locally to understand how that might work in another country, right? Because, even though you might have a prenup agreement that's valid in the United States, it might not be valid outside the U.S. Said spouse might be entitled to, even your U.S. assets, if you're living, let's say, in a place like Colombia or whatnot. And so I think it's really important to, research that, et cetera. The other thing that we see a lot is, setting up trusts and even offshore trusts for whether it's U.S. assets or international assets, and, how that might ultimately affect a divorce, right? Now, my experience has always been in the setup side as opposed to, really being able to give any tips to the audience of how that plays out, in a divorce proceeding. But I think that, anytime you're looking at asset protection, you really need to look at, where the jurisdiction is and what the assets and, what the governance of those assets are, right? So, for example, we do a lot of trusts in places like the Cook Islands or Belize, and then even underneath, you have the trust on top, and then you have like an LLC underneath that holds the assets. And, that could also be in the same jurisdiction or another jurisdiction, like Belize or Nevis. Anyways, the point is to go after those assets. It requires, engaging a local attorney and going through the local process, which, could be quite expensive. So it could be a deterrent for somebody trying to get those assets. But again, it is all about, where those assets are, right? If it's a U.S. brokerage account, the U.S. might have jurisdiction over those assets and it might not be as enforceable. But if you have some sort of international offshore brokerage account, then again, they have to deal with the local jurisdiction as far as where the trust is set up and maybe even, where the brokerage account is. And so, you have this sort of money chase or whatever that might not be worth it when going through a divorce proceeding. So when it comes to asset protection, there's a lot of different ways to do it and the formation of the trust. And I think that also when people form trusts, they have to understand that you are giving up your right to those assets, right? Those assets are no longer yours. They're owned by the trust. But again, in some cases, I think it could be a good form of asset protection just in general, right? Against creditors and, the other governments, if you will, and also potentially in a divorce proceeding. So I've seen that as well.
Do you feel like that's only for like the highest net worth families that are out there, or does the average person do this?
I don't want to say it's for like the highest net worth. I mean, I always say that, your net worth should be at least like 500 grand, but that's not like, you know what I mean? I think it's still attainable for people. I think, ultimately just to give some numbers on that, depending on how complex it is, to set up an offshore trust, it's going to be, $10,000 to $20,000 for the setup and maybe like 5-10, annual maintenance or whatever. So like, it's not, it's a cost, but I don't think it's sort of, only for those ultra net worth people that are, hundreds of millions of dollars, right? And it's just also how important it is to somebody, to have that asset protection, whether it's, when you're getting into a marriage or whether you're getting into, or, against any other creditors and where the location of your assets are and so forth.
One of the things we see a lot is people are trying to hide money, right? And I just, we had a case where we went through about 1,400 pages worth of discovery and going through the tax returns shed some light on a few things. One of which we ended up finding an HSA account that we didn't know that the spouse didn't know existed. And then it was also because of the foreign taxes that were reported on the tax return. There was some Swiss account that we found. I don't know if it was like a Swiss bank account, whatever. Like there was a Swiss account of some sort that we're still waiting to get some more details on. Do you see stuff like that happen a lot? Where you go through tax returns, you're like, wait.
I was going to say that's a great point, which is, like like people talk about like hiding money, et cetera, but when it comes to, hiding money outside the US, especially when you talk about like tax returns and stuff, I mean, again, there's a lot of rules in the United States about reporting your foreign bank accounts, your foreign assets, your foreign trusts. So, these sort of structures to set up, again, a foreign trust, for example, and underlying assets and bank accounts, that's good for the protection, but that's not really good for the anonymity, because if you do it right, well, you need to be in compliance, right? Which means that you do actually need to report the fact that you have a foreign trust. You do need to report that you have foreign bank accounts that are over $10,000 any point in time during the year. So, there is that other side of it, which is, yeah, you'll have the protection, but, during discovery, as you mentioned, you will have, if you did it right and you work, then you will have this list of foreign bank accounts, et cetera. And again, the government, and this is not even the IRS, this is called FinCEN, which is like the Financial Crimes Enforcement Unit. They'll have that information, right? Basically, they will have, you have to disclose the name of the bank, the actual bank account number, the location of the bank, and then the highest balance. So, again, to your point, in a discovery, the other side will have access to that information.
This is fascinating to me because we deal with so much of this stuff both domestically, and I've seen a couple of cases with this over abroad. So, are there other things that we should be looking at? And this is maybe I'm just selfishly asking you this because I do this work every day. If I'm looking through these tax returns, what am I looking for? Because and I think I know the answer to this because I've been doing this work for almost 20 years now, but I can't be an expert in everything and know everything about everything. So you're the pro here tax wise. So if you're me or you're one of our listeners that's going through a divorce or one of our clients that's going through a divorce and you have all these documents, what are you looking for on the return to start trying to find some of these hidden assets?
Yeah, I mean, so first thing is on Schedule B for like interest and dividends at the bottom of the page. This stuff gets messed up all the time, either voluntarily or involuntarily, right? But on the bottom of Schedule B for interest and dividends, there's a few questions that say, do you have a foreign bank account? Part two is, do you have a foreign bank account? Is it over $10,000 that you have to disclose on the FBAR, which is this bank account reporting form? And then it even says, like, do you receive a distribution? Then it asks, actually, where is the location of the bank account? If you answered yes to question two. And then it asks, right, if you have a distribution for a foreign trust. So the first, that's the first area to sort of look on somebody's tax return. Then in discovery, you might ask, did you have to file an FBAR, which is foreign bank account reporting? And then there's also another form, Form 8938. That's another form that sort of includes foreign bank accounts, but it includes foreign companies, foreign pension funds, mutual funds, any sort of what's known as like a brokerage. That's known as like a foreign financial asset. And so, again, for anybody who has a spouse in an international tax situation, you're in an international tax situation. Again, these are disclosure forms you need to do. And there's a lot of people in the United States that are foreigners. And let's say they immigrate to the United States and they don't even know that they have to file this. So we see a lot of sort of just snafus with like local U.S. accountants. And then, I married my husband or my wife is from wherever and they immigrated and they have family businesses or whatever in said country they're from, and they're not reported correctly, which, could be a risk to both spouses because, there's like $10,000 fines with the IRS if you don't report it correctly, et cetera. And then two is, again, there's ways to sort of look and see, in discovery if they have these sort of, again, foreign companies, foreign bank accounts, et cetera. And so it's like, Schedule B has it. There's something called the FBAR. 8938 is for these foreign financial assets. It's another aspect. And then 5471 is if you have a foreign company or like shares in a foreign company over 10%. So, and again, we see a lot of that when it comes to like family businesses. I do a lot of work in Latin America. So it's like, and sometimes people don't even know, right? I didn't realize that my father gave me whatever percent of the business because It's sort of some local like inheritance tax planning, in the local country. And and then that comes up in these situations. I'm sure you're aware.
Yeah. I have a question on business valuations that I
Please.
want to get to here in a second.
Yeah.
But before I do, I have another question. This is I have a lot of questions for you today, man. You just brought up another case that I was thinking about where
Yeah.
a couple lived here in California,
Mm-hmm.
and the wife decided she wanted to go back to China as
Mm-hmm.
part, and then so 2 years goes by and they're basically living separately and it's time to get a divorce. And she's
Yeah.
now renounced her U.S. citizenship. So
Wow.
when when that something like that happens, which is very rare, but it does happen, are there any
Yeah.
like what do we need to be thinking about? What are the consequences of that? Like, talk me through
Yeah, I mean,
that.
again, that's an interesting one. Actually, that's a really interesting one. Yeah, so we do a lot of renouncements, right? And people could renounce citizenship, or the other thing is, if said spouse had a green card and it was over 8 years, they're a long-term green card holder, and so then they're subject to an exit tax, right? And that exit tax, if you renounce your U.S. citizenship or you renounce the long-term green card of over 8 years, and your net worth is over $2 million, then there's an exit tax. So that's a whole other aspect of, again, if the assets haven't been divided because, both spouses are still married, there's a risk there that, this person renounced and, they owe an exit tax. And, does it fall on this sort of innocent spouse? The spouse didn't know because technically you're still married at the time. So, there's a whole, and that's a big thing that I've seen. I'm sure maybe you've run into it. This sort of like innocent spouse sign off on tax returns.
That was one of the another questions I had on
Yeah,
my list of questions. We
so
see this too because
all the
they're like,
time.
most of the time we work with one party who hasn't been
Sure.
involved in the family finances and they're
Right.
clueless as far
Exactly.
as the taxes go. So
Well,
yeah, finish your thought
exactly.
there.
It's always, that's always the thing. There's always, very rarely, I mean, I respect it either way, but like very rarely do I see, where both spouses are like really involved in the taxes, right? There's always one spouse that's sort of the financial person or kind of, and it, male or female, it doesn't, it always varies, but there's always one spouse that's more focused and the other one's not. And so, you get in these issues where, the one spouse is filing things incorrectly or doing things bad, and and then the other spouse sort of suffers. So to get back to that point, I mean, might have one spouse that renounces, and they did it incorrectly. They owe an exit tax, or I don't know how their tax return will be filed, or how it was filed in the case you're talking about. But there is a risk to again, the innocent spouse here. I had actually a case last year. It was the same thing where one lady, she was German. She gave back her green card. We helped her with this exit tax form. She was under the 2 million, but just the fact that she'd given back her green card a few years before, and her ex-husband, who was still who was a U.S. citizen, was still filing her jointly on the return, but she had given back her green card, so she had gotten out of the U.S. tax system, and we had to sort of. I just said, hey, listen, let's file the forms we need to file for you so that you have officially exited the U.S. tax system, and if they go after him, that's his problem, and we could just do this innocent spouse defense because he was forging your name to file jointly on these tax returns, et cetera. But obviously you see it could get really nasty sometimes, and it's one thing when you're doing it, I don't know, between each other, but when when you're doing it and you have the IRS involved, there's a real risk, and I mean, candidly, the IRS has power to seize properties and this and that, so it could add further complications to an already messy situation.
Yeah,
You know,
am a little concerned about how this one's all going to go
you
down.
know,
It may take a while for us for it to
yeah,
all unfold. We'll see how it
especially with
goes.
this international stuff, because then it's like it's one extra layer of complexity when you have worldwide assets. And like I said, I mean, I don't necessarily disagree with it, or agree with it, but the IRS really does have very punitive fines when it comes to like
Yeah.
not disclosing things, and you don't want to be on the hook for another spouse's negligence, your ex-spouse's or soon to be ex-spouse's negligence when it comes to that stuff. So a lot of things could emerge.
And it's not like you're going to get somebody on the phone to help you without having to wait on hold for like 4 hours,
Yeah.
right?
Oh no,
Like,
it's
I
super
mean,
bad.
yeah, good
Super
luck getting in touch with the
bad.
IRS to get it all
So
sorted
sad.
out.
Yeah, exactly. So, I don't know, like when it comes to these sort of situations, when you do the divorce agreement, this type of identification and release from liability, et cetera, is important if you're in a potential, if there's an international aspect to your marriage.
Totally. Let's talk a little bit about the business valuation if we can, because that one comes up a
Yeah.
lot.
Yeah. Yeah. I
How,
mean,
what,
go ahead.
yeah. No, I was going to say, I mean, it's one of those things where, you have these people that have these, it may not be a, $5 billion, small cap organization that's out there. It's just this mom and pop that, does $200,000-300,000 a year, or, $500,000 in revenue a year or something like that. And some people are out there like, well, it's not really worth anything. That's not true. I mean, at least
Yeah.
from my perspective, I mean, we have to, I encourage people all the time to, if you have a business that's involved, and we want to make sure we get a real value of that business to ensure you're getting your fair shake.
Yeah.
Any thoughts on that?
Yeah, no, I agree. I think, again, it's obviously when it comes to valuation, it's looking at like, the discounted cash flows and what's the future value of the business, et cetera, and discounting it back. And then in the international sense, of course, there's always like, well, there's like what's country risk adjustment for like a country. Do you know what I mean? Like evaluation of a company in like, let's say Brazil or whatever might have a less value than the US. And, as far as like the future earnings of then you're looking also at like, what's the future earnings of in another denomination of a currency, et cetera, that might be, devalued to the dollar. So there's sort of another level of complexity when it comes to this sort of thing. But, valuation, is also sort of like an art, where you just have to sort of come to the middle and write it and say, hey, listen, this could be the true value and kind of agree. Cause you're right. When you value something, you could make it so that the business looks like zero, or you can make the business that it looks like a lot, right? And sort of, being fair with the assumptions obviously is important. And international setting, it's sort of obviously also right the risk adjusted rate for like a country, et cetera. Do you see a lot? Do you see a lot of valuations, or what's your experience with that? Because that's always, I love valuation personally, but there's an art to it. And there's a negotiation as well, right?
Absolutely. And I'm actually going to be working on my business valuation certification next year, because
cool.
I think there's such a demand for it. And I think it's one of those things that we continue to outsource and we could do in-house, for our clients, and make it really truly make this a one-stop shop for people that are going through a divorce that have, and I'm going to do some forensic accounting work next year and so on. But
nice.
So when this airs, we probably won't air this until the beginning of 2025. So around that time, I'll be starting that process. It sounds a little technical. I'm a little bit nervous about that aspect of it, because you don't know what you don't know. And I've never done that type of work. I've been a financial planner for 20 years. I've done retirement planning and estate planning and insurance and all the stuff like wealth management stuff for 20 years now. So I can do this work and also I've been doing the divorce planning, for years too. So I can kind of do this work, not really thinking about it and stressing about it anymore, but adding in a whole new layer and a whole new level of a different area of expertise, has me a little bit nervous, but I think it's incredibly important.
I think it's important too. And I think, valuation is such a skill, whether it's in divorce or in, we value startups, et cetera. And yeah, I mean, obviously if you or any of the listeners ever need help with valuation before you get your license, we do that as well. But yeah, it's an interesting aspect of planning.
Totally. So let's say my client comes to you and we have a scenario where, we come across a case where there's, international taxes involved, whether there's dual citizenship or whatever the case may be. What are you telling them relative to, like, if you're taking on a case that we give you, what is that experience like? What are some of the tips and tricks you're going to share with them? This is kind of the carte blanche part of our conversation, but like, what would that experience look like? And what are some of the tips that you might want to share with them at the outset?
Yeah, I think again, it's first off just understanding, what the international assets are, if the income's reported, et cetera, and really sort of going through, the valuation of these assets and whatnot, right? Because a lot of times when you look at the international side, there's valuation issues or there's just compliance issues, right? Meaning that, it's sometimes tough to get information on what the value of certain like investment funds or mutual funds, et cetera, and have they been reported correctly. And so a lot of it is sort of, looking at that analysis. I mean, when it comes to people that are, in either living abroad or investing abroad, I mean, there's a lot of tax savings opportunities, right? So for example, actually, one thing that I always tell people that, and this is more for people that live outside the United States that are American, but it's, you could use your non-U.S. spouse as a way to not report bank accounts, right? Because if you have a bank account that's not in your name as an American, you don't have to report it to the U.S. government. So it's the other side too, right? Where sometimes people put names in their spouse, and unfortunately later, if there is some sort of divorce proceeding, how are they able to prove that was also part of their money? And so, I'm always like very careful when it comes to trying to, advise people on this, because it's like, well, there's a tax optimization strategy here, which is to put it, in your spouse's name. But then obviously there's also that risk or that way of, okay, well, would the prenup cover, this account that's not in your name? Do you know what I mean? And so I think there's, sort of like two sides to that. One, trying to do tax savings, and then also one which is, trying to protect your assets and divorce planning, et cetera, if you will.
Yeah. And doing it all the right ways so you don't get jammed up. Because it sounds like it's super complicated.
Yeah, it really is.
Yeah.
It really is.
Well, man, I'm glad people like you were doing this work, because I don't know if I could do it.
Somebody got to do it.
Somebody's got to do it, man.
No, well, you know what? I will say this. I love my job because, there's some very sticky situations, and it's not always easy to interpret, what's going on in a messy situation, or somebody that has, just messy finances or finances spread around the world or between, the U.S. and another country, and trying to figure that out and going to the tax treaties, et cetera, is truly, it's a challenge, but it's a very rewarding challenge.
100%. I mean, so if you can keep more money in people's pockets, that's what it's all about, right? That's just like the work we try to do as well.
Yeah, exactly.
100%.
Yeah, we're aligned.
Any questions I didn't ask that I should have?
No, I mean, I think like I just kind of repeated, you have to sort of look at tax planning and looking at how that is with sort of your long-term strategy when it comes to asset protection, et cetera. And like I said, we do a lot of these trusts, et cetera. They're not really for tax planning, but they are for asset protection. And there's other strategies that we do that's, more for tax planning and not as much asset protection. And so it's really, trying to balance that with, again, divorce planning, long-term planning, if you have kids, next of kin, putting stuff in their name. I mean, we see a lot of divorces. I wonder what you see, which is like, people don't care about their spouse. They just want to have their kids to have that. You know what I mean? And they're just like, hey, I want my kids, like spouse could get whatever, but like, I just want my kids. And so again, that comes with these things like, mechanisms like trust, et cetera, where, there's asset protection, but there's just more of, it's estate planning, right? And, right now the estate planning threshold is $12 million, meaning, your next of kin could have $12 million without inheritance tax, but in a couple of years that might go, grossly down. And so now is a good time to really get, trust planning, estate planning, if you're getting married, a divorce planning, et cetera, kind of all one go.
Yeah. Hey, man, I think it's all about, understanding what the goals and objectives are at the outset, right? And then we can, help them plan around that. And I think regardless, whether you're a tax expert like yourself or a financial planning person like me, I mean, that's where we start, right? And understanding all those things can be super helpful. So if you're listening, you want to when you come to these initial conversations with folks like us, you want to make sure you're getting understanding what your goals and objectives are.
Correct.
Really think them through before you have conversations with us, because then we can help you sort it all out.
It's true. You know what? I agree with that. The more prepared you are, right? And people always like, look at Google and things like that, which I respect. I think that it's good to have that preparation. I don't think Google is always like the end answer. In fact, a lot of people Google and now ChatGPT, and like they come with like actually just wrong stuff, like you ChatGPT, you're wrong. But again, even just coming to a meeting and being informed, and yeah, bringing these goals, bringing these, potential concepts or whatever is great. And then, professionals like you and I, Jamie, can sort of narrow down and actually strategically put those plans and goals into place.
Absolutely. Couldn't have said it better myself. I appreciate you and your time and all the insight you provided
you're
us today.
welcome.
It's super helpful. Yeah.
Yeah.
So for our listeners who want to learn more about managing their taxes, especially when it comes to divorce and living abroad, visit Vincenzo's company website at onlinetaxman.com. And remember, if you're facing financial complexities during a divorce yourself, Allegiant Divorce Solutions is here to help. You can visit our website at allegiantds.com for expert financial advice in that realm. Don't forget to subscribe to our podcast for more insightful episodes. And until next time, keep your finances in check and your future secure.